Hi there, I welcome you to my video about double entry bookkeeping. Now, in order to be able to produce financial statements at the end of the period, a record needs to be made of every individual transaction as it occurs. This is known as bookkeeping. And in this video, we are going to see how bookkeeping is done. So double entry bookkeeping. Now every item in the financial statements, of course, will have an account in which we will keep a record of that item. The book or file containing the accounts is known as the nominal ledger, or what we call the general ledger. And the accounts are called the ledger accounts. Now, a ledger account has a left-hand side, that is the debit side, and the right-hand side, known as the credit side. If we make an entry on the debit side, we say that we debit the account. If we make an entry on the credit side, we say that we credit the account. So for every transaction, there will be two entries. One on the debit side of an account and one on the credit side of another account. We call this double entry. We have different rules of double entry. These rules you have to learn them. They I must know if you're to get everything right. You need to know the rules of double entry. You need to know when do we debit and then when do we credit. Whenever we debit, then we are increasing an asset, we are decreasing a liability. Alternatively, we may be increasing an item of expense. Then when we credit, it means that we are increasing the liability account, we are decreasing an asset, or increasing an item of income. You need to learn those rules. So here I have an example. I want to use this example to see how we can work through the following entries together. I will use the T accounts because that's what we are required to do. So in this case, we are required to enter the following transactions in the appropriate accounts. We are required to enter the following transactions in the appropriate accounts. This information is for the financial year 2006, as you can see on your screens, for the month of August. So on first started in business with 7,400 cash, starting in a business with cash 7,400. Of course, the money used to start the business, that is capital. So remember, as I've told you, that for every transaction there will be two entries, a debit and then a credit. So in this case, we are starting the business with cash, so meaning that we have an asset which is cash. So we are going to debit the cash account, and then the corresponding credit entry will be made in the on the credit side of the capital account. So this is my account. I'm going to name this cash account. This is my cash account. So on 1st August, I write capital. Capital of how much? Capital of 7,400. But because each and every transaction has to be recorded twice, I have to create another account, and I'll name this the capital account. I'll credit this account. Don't forget to show the date. Then in the details column, I write cash. That is 7,400. So that is your first transaction. You debit the cash account as well as the capital account. Now on second, paid £7,000 of the opening cash into the bank. Paid £7,000 of the opening cash into the bank. So here we still have two accounts, that is the cash account as well as the bank account. Our cash is reducing. Why? Because we are getting this cash and we are depositing it, or we are paying it on our bank account, or paying it to the bank account. So meaning that our bank is going to increase, but the cash is reducing. So if you want to reduce the cash account, then we are going to credit this cash account. So what you'll do on the credit side, this is on second August, you write bank, that is 7,000. But of course, remember, we have to record each transaction twice. We have to make two entries. So you have to create a bank account. Bank account. This is on 2nd August. Cash of 7,400. So those are the two entries for that transaction. The next transaction is on 4th. Bought goods on credit, 410 from J. Watson. So we are purchasing goods but on credit. So meaning that here we have the purchases account, which is an item of expense, but then at the same time we have J. Watson. J. Watson is our trade payable. Is a supplier supplying us goods on credit. So when you try to look at this transaction on 4th, we have the purchases account, but we also have the liability account. The liability account, that is J. Watson's account. It's a personal account, okay? So we debit the purchases account, and then we have to credit the liability account, that is J. Watson's account. So the purchases account, this is on 4th August. I write under the details, I'll put the name of the supplier, that is J. Watson, and the goods are worth 410. But remember, we have to complete the double entry for this. So I'll have to create J. Watson account. This is on 4th August. In the details column, we'll write purchases 410. Remember, for every entry, for every transaction, there will be two entries, debit and then the corresponding crediting entry. On 5th, bought a van by check for 920. Bought a van by check for 920. Bought a van by check for 920. So our money on the bank account is going to reduce. So our bank account is reducing, but then we are increasing the asset account, that is the van's account. So in the bank account, I'll credit 4,920. That is on 5th. My bank account is here. So on 5th August, Details, we write van. Van of how much? 4,920. 4,920. But then I'll have to prepare the van's account. Van's account. The date, that is on 5th. Details, I write bank because we paid by check. That is 4,920. Next transaction after 5th, that is on 7th. Bought goods for cash, 362. We are buying goods for cash. Of course, our cash reduces and then the purchases account will increase. So a credit entry will reduce the cash account, then a debit entry will increase the purchases account. So this is on 7th. Credit cash account. The details, those are purchases. How much? This is 362. But don't forget, we have to complete our double entry. So I'll go in the purchases account, then we debit the purchases account. This is on 7. Purchases, 7. Cash. Cash is how much? That is 3,362. 362. Yeah. Then from 7th, we move to 10th. Sold goods on credit, 218 pounds to L less. Hey, we are selling goods on credit to L less. When we make sales, those are incomes. And I've already told you that when you look at the rules of double entry, a credit entry will always increase either the liability account, increase capital, or it will alternatively increase the income account. So the sales account will always increase with a credit entry. The sales account increases with a credit entry. So in this case, we are selling goods on credit to LS. But in the same transaction, we create an asset. That is the trade receivable. That is LS. So we need a personal account for this customer. That is LS's account. LS, that is our trade receivable in this case. So we have to debit LS's account, then we credit the sales account. So sales account, we need to create the sales account. Sales account. This is on 10th August. The sales were made on credit and we are selling to LS, the customer. Goods worth 218. Then I'll also create L less account. And this account is going to be debited. Sales to 18. Sales to 18. Next transactions, whenever you sell goods on credit, you'll debit the customer's account and then you credit the sales account. Returned goods to J. Watson. Returned goods to J. Watson. So previously, we see that we had purchased goods from J. Watson, but now we are returning back of these goods to J. Watson. So we need the return outwards account. That account will record all the returned goods. Then, of course, the supplier's account, that is J. Watson, that account is to be debited. So in this case, we shall create the return outwards account. Return outwards account. Let us create that here. Return outwards account. Return outwards account. So this account, let us first go to the supplier's account. That is J. Watson. J. Watson's account. Now we look at J. Watson's account. On 4th August, we see that we had purchased goods from J. Watson and this account was credited. Now if you are returning back goods to the supplier's account is going to reduce, so we debit the supplier's account to record the returned goods. So on 12th August, in the details, I write returns out. The goods returned back to J. Watson, that is 42. So in the return outwards account, it means that I'll make a credit entry in that account. That is on 12th August. J. Watson with a 42. The goods returned were worth 42 pounds. Okay. Sold goods for cash, 54 pounds. We are selling goods for cash. The cash account increases, and if you have to increase our cash account, we increase it with a debit entry. So this is on 19th August. I'll write sales. How much? 54. Sales of 54. But of course, we have to complete double entry. So you'll go to the sales account and then you credit it with these sales for cash. That is on 19th. Cash. How much is this cash? 54. That is 54. Then the next transaction, bought fixtures on credit from Firelighters Limited, 820 pounds. Bought fixtures on credit from Firelighters Limited, 820 pounds. Still, this is a credit transaction. Now, a credit transaction will always give rise to a receivable or a payable. Now, since we are buying the fixtures on credit from Firelighters Limited, Firelighters Limited is a payable to the business. So, is a liability to the business because the purchase of the fixtures is on credit. Now, fixtures, these are assets. Assets, the asset account will increase with a debit entry always. So we have to prepare the fixtures account as well as Firelighters Limited account. Fixtures. We purchased fixtures, so the fixtures account is to be debited. This is on 22nd. I write the name of the supplier since it's a credit transaction, Firelighters. Firelighters Limited, 820. Then I'll create another account. That is Firelighters limited account. We credit it. This is a liability account. So on 22nd August, fixtures 820, fixtures 820. Remember, each transaction there has to be a debit with a corresponding credit. On 24th, F Holmes lent us £1,500, paying us the money by check. We are receiving some money from F Holmes. Is lending us, so this is a loan. Yes, we have a loan from F Holmes, but this money was paid through the bank account. So our bank account is going to increase because we are receiving money. They are paying some money into our bank account. So I'll go and increase the bank account. The bank account increases with a debit entry. So this is on 24th August. I write F Holmes because that's where we're getting the money from. F Holmes. In fact, in brackets I can say loan. This loan is of how much? 1,500. 1,500. But of course, due to the duality concept, that for every transaction there will be two entries, I have to create the loan account or a Holmes account. This is a liability account, a loan. So we credit this account. This is on 24th. We receive the money through our business bank account worth 1,500. I think that's it. Worth 1,500. Let me check the bank to confirm the amount. Yes. Okay. On 29th, we paid J. Watson his account by check. We are paying a supplier by check 368. What happens to your bank account if you're paying by check? The bank account, the money on the bank reduces. So I'll go to the business bank account. That is on 29th. We paid J. Watson. So you credit the bank account J. Watson with 368. Remember, we had purchased goods on credit from J. Watson. So go and debit J. Watson's account on 29th. Bank. Since we are paying J. Watson's through the bank, and we are paying 368. Then what next? We paid firelighters by check 820. We are paying firelighters by check 820. Still, this is through the bank, so our bank account reduces. This is on 31st. That is firelighters. We are paying how much to firelighters? That is 820. 820. Then go to firelighters limited account and debit it. That is on 31st. Bank 820. So that is our last transaction. Now, after entering the transactions in the respective ledger accounts, the next step always is to balance off these accounts. These accounts have to be balanced off, and now in the next video I'll show you how to balance up these accounts, and then after balancing off the accounts we shall see how we can extract the trial balance. Thank you for watching. If you have any question, please feel free to ask in the comment section. I remain your tutor, Senior Hannington. Bye bye.